Good evening, students. Welcome to the live learning classes organized by Board of Studies, ICAI. First and foremost, Happy New Year to all of you who are watching this session live. I wish all of your endeavors for the year 2024 comes to reality, especially with respect to your examination on CA final. I wish you a good luck and let the dreams come true in this year 2024. Okay? With this, let us start with our today's discussion. Today's evening, I'm going to explain on this topic called import and export procedures, along with transportation and baggage related provisions for understanding on customs point of view. Before we formally commence with our discussion, please let me have confirmation from some of you. You're able to hear me and also the presentation is visible. Once I have confirmation from some of you, we'll go ahead with our discussion. Oh. Good evening, Harshit, Mancha, Shailesh, Rahim, and Viraj. Great. There's one question from Harshit. I'll just take up that question and then let's go ahead. Good. Harshit says, sir, in rule 2, it is mentioned that if a person directly or indirectly holds 5% controls, but control only comes after. Okay. I do one thing, Harshit. I'll just have a recap of our yesterday's, not yesterday's, the previous session on valuation. After that, we will come back and discuss on your document. Yeah. And once again, all of you, wish you a happy new year. Thanks for your wishes and messages. I'm happy and glad to receive your messages. I'll just have a quick recap on what we have discussed in the last class, and then we will come back with our today's discussion on procedures. So, valuation, this is one important topic we had discussed. Examination, minimum 4 marks is what you can expect questions from this particular chapter. 4 marks, sir, it could be a problem or it could be a MCQ on a couple of topics which we can expect, right? So here, to start with, valuation of goods under section 14 of Customs Act. So I have two mechanisms. One is under 14 subsection 1, another is under 14 subsection 2. And students, please open your study note number 4, valuation. Come to page number 4.77. 4.77. So, my valuation under customs law is on two mechanisms. One is transaction value. That means the value which is declared as transaction price. Or on the other hand, it could be a tariff value where the board CBAC is going to fix a particular amount for a particular commodity. Example, for gold and silver, for steel, for petroleum products. Always there is a per quinta, per kg, per gram value which has been fixed by the customs authorities. So when a duty is fixed, which is per kg or per unit of measurement, that's called tariff value. 14 subsection 2. 14 subsection 1. Price actually paid or payable for goods when sold for export or to from India. For delivery at time in place of importation or exportation, buyer and seller are not related. Price is the sole consideration. Additional obligations of the importer where board has reasons to believe that the value of such goods may not be declared truthfully. Now, this is your 14 subsection 1. Here, we learned something under GST law with respect to valuation. The same aspects in relation to buyer and seller are not related. Price is a sole consideration. These two are points which originate from your GST related provisions. In addition, the last limb, this particular limb, additional obligations of the importer where board has reasons to believe that the value of such goods may not be declared. Wherein reference to rule number 10, where various aspects have been discussed, there will be a questionnaire from the customs officer to check whether or not these values have been included in your transaction price. So let's travel to that point also. And importantly, when I said one MCQ question, examination, you may have 2 marks MCQ question on the basis of application of rate of exchange. Please remember, my source for rate of exchange, my source for rate of exchange is 1, the rate prescribed by Reserve Bank of India. 2, the rate given by customs authorities. Third, the rate available from FEDA, Foreign Exchange Dealers Association, which we call authorized dealer who deals with foreign currency. In your day-to-day life, where you will find this particular person, generally the banker or authorized dealers like your UAE exchange. These are the people who buy and sell foreign currency. In relation to customs, because your imports and exports are dealt in foreign currency, my customs rate, this is a source which I adopt. So in general, for the purpose of imports, you see, the data filing of bill of entry is relevant. In case of exports, the data filing shipping bill by way of vessel or aircraft, bill of export by vehicle. So filing a shipping bill or filing bill of export is relevant for computation of exchange rate. This exchange rate, you will be given 2 more dates. Like I would say, they will be giving along with this particular rate, you like examination, they'll be giving your section 15 read with conversion rate. In section 15, we will examine what is the date relevant for customs duty rate. So this I would be preferring to section 15 for determining customs duty. For conversion, either filing bill of entry or shipping bill or bill of export. This would be relevant. We have worked out one problem in the last class. Again, I will make a recap of you to work out one problem in this regard. So this is my date relevant for converting foreign currency into INR. Then, where officer believes that the value of goods is not as per section 14 subsection 1, he may make you to travel to these valuation rules. When section 14 subsection 1, there is any aspect which is not met with, like price is not the sole consideration, or related party transaction, or adjustments as recommended. Any of these reasons, we would be traveling to the valuation rules. Customs valuation, determination of valuation of imported goods, rules 2007. We will go in the chronology of rule 3 to rule number 9. So let me explain rule number 3. Rule 2, definitions are there, where place of importation. This place of importation is relevant from one of the definition where there is a ship charges, where goods are taken from a bigger vessel to customs area using small boats or ships. So we pay this line charges or ship charges. This would be relevant for computation of CIF. Based on one example, I gave one example. How do we calculate this particular place of charges relevant for place of importation? Next. Related party transaction. Now, there is one question from Harshit. I'll just read the question and I'll come back to this particular related party transaction. So Harshit is asking this question. In rule number 2, it is mentioned that if any person directly or indirectly holds more than 5% shares or controls, but controls only comes after you have 51% or more. Reference to the above provision in example 1, M/S IES holds, Mrs. IES holds 30% equity shares capital, but in answer of that example, not considered the 5% provision. I think M/S material. I am not. Harshit, you need to help me out to understand. One M/S IES. Mrs. IES. If you are referring to any problem, if you can give me the page number, I'll be in a position to help you out with this clarification. Anyways, I'll just clarify that point once again, Ashit. Just pay attention to this particular slide. Now here, this particular slide gives us how do we examine related party transaction. Persons including legal persons deemed as related persons if such persons are officers or directors of one other business. Director, this is a catch point. Any common officer, any common directors are there, we call them as a related party transaction. Such persons are legally recognized as partners in business. Partners, like by way of a joint venture or partnership, again, they are called as a related party transaction. Employer relation, equivalent to GST, that also is considered as a relationship. Third person, now, Arshit, your question is connected with this one point. A third person controls directly or indirectly or owns or holds greater than 5% of voting stock or shares of both of them. So here, third person is controlling directly or indirectly. Now, there are two aspects which were being tested here. Let me put the example this way, Harshit. Let me have third person, Mrs. ABC, INC, exporter, Mrs. XYZ, INC, importer, Mrs. PQR Limited. Now, in this example, Harshit, a third person controls directly or indirectly whom both of them. If this third party is controlling both of them, it's called as a related party transaction. So when I say control, more than 50% shareholding is required. Or a third person own or hold 5% of voting stock. So either control or holding more than 5% is something which is considered as related party transaction. So here, if I examine this particular case, this ABC INC holds 5% stock in this particular entity, also holds 5% stock in this particular PQR Limited. A third person own or hold more than or equal to 5% of voting stock shares. So if more than 5% shares are held, it is considered as a related party transaction. Or this third person who controls either both these entities. The third person controls directly or indirectly whom both of them. You can read from here. Both of them. So here, 2 points are covered here. One is control or holding 5%. Either of this is sufficient for us to examine here. Now, assuming this third person holds 5% in this particular entity XYZ Limited and does not hold any shares in this PQR Limited. I repeat my point here. This third person, that is Mrs. ABC INC, holds 5% in XYZ INC, but not in PQR Limited. Then it would not be considered as a related party transaction. Alternatively, assuming for a moment, third party is not there, XYZ is holder in this entity called PQR Limited. Now, this particular export investing in importer or importer investing in exporter is not connected with this particular point. So in this particular point, only a third person is being referred to. Let's move further to understand. One of them controls directly the other. Now, the other transaction, in this case, if I have exporter, if I have importer, I could have a control either this way or this way. What they say, one of them controls directly or indirectly other. So this is the case where more than 51% holding is there, then it is called as a related party transaction. If only 25% holding or up to 50% is there, then this condition of control does not come into picture. Control comes into picture only 51% holding is there. Probably the example what you're referring, Harshit, is connected with this point now. If one of them controls directly or indirectly the other, if 51% holding is there, then you call that as a related party transaction. Examination 1 mark MCQ is tested from related party transaction. So either this particular limb or this particular limb, that would be tested. A third person controls directly or indirectly both of them. Now this point is covered over here. Again, they are specified separately. A third person controls directly or indirectly both of them. Again, here also both of them. Such persons together control directly or indirectly a third person. Now this is altogether a different permutation and combination. Exporter and importer jointly controls a third person. Such persons together control directly or indirectly a third person. Assuming exporter is holding 20% and importer is holding 32%. 30 plus 2 would be 52. If 52% is held in a third person, then these two people are considered to be a related party transaction. Now, if you ask, sir, how does the customs officer get to know? Because there is a declaration to be given by virtue of my details to be furnished for provisional assessment, I would be mentioning whether there is any interest among both the parties. Is that a related party transaction? Now, what is a related party transaction? They may not explain. We have to understand with the given scenarios from examination point of view. Moving further, such persons are members of same family, blood relation. One of them is the sole agent or distributor, sole concessionaire of other. This is your agency or agency concept. That is also called as a related party transaction. Examination. Again, I repeat, the aspects which would be tested for your understanding is from this limb, from this particular limb, and this particular limb. These three limbs, fourth limb. These four limbs are relevant for your MCQ. If you can make a note of this particular chart, examination before you go, you just refer to this particular transaction. You will get a more clarity. Right? Harshit says page number 4.16. Let us look at that. I'll come to your dot, Harshit. Let me travel to that. Related party transaction. Okay. IES Limited, SSC, imported certain goods at 20 per unit from an exporter who was holding 30% equity in the share capital of the importer company. Subsequently, the SSC entered into agreement with the same exporter to import the same goods in bulk at $14 per unit. When imports at the reduced price were effected pursuant to this agreement, department rejected the transaction value, stating that price was influenced by relationship and completed the assessment on the basis of transaction value of earlier imports. Under Rule 4 of Customs Valuation, determination of rules. State briefly whether department action is sustainable. Now here, what is a shareholding, ma? Look at this particular transaction. They say IES Limited, SSC imported. There is an entity called importer from exporter who was holding 30% equity. Now, holding is 30%. Can control seek to be exercised, Harshit? Answer would be no. Right? So let's read the answer. Department action is not sustainable. Inter alia provides that person shall be deemed to be related. Person shall be deemed to be related if one of them directly or indirectly controls the other. The word control has not been defined under the said rules. As per the common parlance, control is established when one enterprise holds at least 51%. So in the example, it is holding only 30%. So control is not exercised. Hope this point is clear, Harshit. Hope this is clear, Harshit. Illustration 1, page number. Yes, Mansa, I'm referring to the same example now. Mansa says at page number 4.16, point number 4, it's written as any person directly or indirectly, rather than it should be mentioned as a third person. Look at this. Okay. Look at point number 5. Answer for this will be connected from here. One of them directly or indirectly controls the other. If you look at this point number 4, any person directly or indirectly controls, owns, controls, or holds 5% or more of the outstanding voters. Any person directly or indirectly owns, controls both of them. So this is a connection, owns or controls both of them. This is one aspect, or holds 5%. So here there was a reference to third person. Entry number 4, there is a reference to third person. Entry number 5, one of them directly or indirectly controls. So for your answer in this particular, both Mansa and Harshit, for this illustration number 1, I would be referring to entry number 5, where one of them has to control. To enjoy that control, 51% is required, which is missing in this particular case because only 30% of the equity share capital is held by the exporter. Hope I'm clear, both Mansa and Harshit. Good. Mansa, hope this is also clear, ma'am. Let me travel to my related party transaction. Examination, very, very important. I'm spending little time for the reason this today's topic and the next topic, what we are going to discuss, both are procedural in nature. One is import-export procedures, transportation of goods, where baggage rules are discussed, and duty drawback provisions. These two chapters are more of theoretical, where you will sleep off. But the way, but I'll try to make interesting, but you tend to get bored because more of theory is it. It's all procedure. So where problems are tested in your examination, where food for thought is there, let us focus a little more, right? So examination, please mark once again, the aspects which would be generally tested is this limb, this limb, this limb, and this limb. These 4 are tested from application point of view, right? Again, 2 marks. When you solve the problem, you're expected to not to say yes or no. You're expected to say yes with this particular reasoning. The third person or one of them is controlling. When you say control, you need to refer that minimum 51% is expectation. Minimum 51% is the expectation. So this is how your answer should be given. Probably, like if things are to be arm twisted. One example in relation to employee. One aspect in relation to employee. So what could be expected from employer-employee? Let us take for a moment. Dell International Dell International, this is US entity. Dell India, this is an importer. Okay. Assuming for a moment, Mr. Wong happened to be an employee of this US entity. Okay. And this particular employee has been seconded. I would use a term called secondment. Seconded to Dell India Private Limited. So Mr. Wong happens to be an employee of Dell International US, who is a primary employer. I call him as a primary employer. Dell India, I call as a secondary employer. Dual employmentship. Is that permissible? Answer is yes. You have the secondment agreement. Under income tax, that is your transfer pricing. Also, when ID returns have to be filed for this expat employees, you would be declaring the global income in the ITL to be filed in India, right? Let's take this example. Say Dell International US has exported a laptop worth rupees, say 2,40,000 at concessional price for rupees 1,20,000. Now, the market price of the laptop is 2,40,000. This was sent, Delhi International has sent the laptop to Mr. Wang for rupees 1,20,000. Mr. Wang filed a bill of entry for payment of customs duty on rupees 1,20,000. Customs officer have rejected the transaction value under section 14 subsection 1, saying that price is not the sole consideration or related party transaction. Examine the contention of the proper officer. Now, they will not give this clarity of secondment agreement, principal employer, secondary employer, etc. They would just say that Mr. Wong, employee of Dell International US, has been seconded to Dell India for 2 years point in time. In the process of employment, a laptop worth rupees 2,40,000 has been sent by Dell International US to Mr. Wang at the rate of rupees 1,20,000. The invoice also mentions rupees 1,20,000. Now, is the proper officer right or having authority to reject this particular transaction? What would be your answer? Yes or no? Before I explain, please give answer. Is the proper officer right to reject the transaction value, or he has to accept 1,20,000? Now, one interesting point, there's one service tax judgment which came in May 2023, in relation to one entity called Northern Operating System, which is a subsidiary of US entity. In this particular judgment, in this particular Supreme Court case law, service tax was demanded on expat salary. Now, why I'm giving this background? When we look at this particular example, such a persons are employer and employee. If I have to set one particular case law, in this particular Northern Operating System, there was a reference and discussion on secondment agreement. Secondment agreement, where the department has felt that this expat employee is considered to be an employee of the US entity, and US entity is presumed to be a service provider to the Indian entity, whereby service tax was demanded on a reverse charge. This is the preamble for Northern Operating System. So why I am discussing one of the elements from that secondment agreement. Secondment agreement, employee continues to be an employee of an Indian entity and also a parent entity. So from this particular background, what would be your answer? The contention of the proper officer to reject 1,20,000 and to demand 2,40,000. Is it right or wrong? Is it correct or incorrect? Namrata says yes, related party. Let me have a couple of your answers, ma'am. I'm making this more practical and lively with the case laws which have come recently. CA examination, always the recent judgments, recent citations would be examined for testing your knowledge. Good. I could see Namrata saying yes, and Aid Kondal is also saying yes. Both of you are right, ma. Answer would be proper officer is right to say there is a related party transaction, and as per this, the value of under section 14(1), the value shall be rupees 2,40,000. 2,40,000. This would be an answer. How did you test it? Based on employer-employee relation. And this is referred in schedule number 3 of GST law. But for section 15 purpose, this is considered as a related party transaction. Moving further, rule number 3. Determination of the method of valuation. Value of imported goods under rule 3 will be transaction value adjusted as per rule 10, subject to rule 12, that is rejection. So here, always there is a reference to rule number 10, which is a master rule, which is called as a master rule. Please keep in mind, students, when you go to your examination, please have a recap of rule number 10. Very important. Reason, one adjustment is always interconnected, rule number 10 with another rule. Right? Moving further, they say such transaction value shall be accepted provided no restriction on buyer for disposal of goods. There is no restriction for sale. Sale price is not subject to conditions for which value cannot be determined. I don't have a contract where my sale price is not a subjective thing. It is fixed. I have no future event attached to the consideration. No further consideration will accrue to the seller which is not adjustable as per rule 10. Buyer and seller are not related. These are the sutras under rule number 3 to accept the valuation. If buyer and seller are related, then transaction value is accepted. When relationship did not influence the price. Now, in the previous example, the Dell example which I have explained, was there an influence on the price? Answer would be yes. The market value is 2,40,000. The price of the laptop sold to employees 1,20,000. Half of the price. Importer proves that price is close to the transaction value of identical or similar goods in sales to unrelated buyers. Now, please remember, I gave this one example, a classic example. Please have identical goods sold to unrelated party. That means to say, the same point in time, if Dell International sells the same laptop along with Mr. Van to say Namrata or to say Harshit, both Harshit and Namrata also declare 1,20,000 and they import that particular laptop. Then you will see that there is no influence of related party transaction on the transaction value. Now, these are the examples, these are the points which would be tested as a theory for rule number 3. And very rare you would expect a theory question. In case if it is expected, what are the prevailing conditions where related party has not influenced the transaction? Moving further, transaction value for identical goods. Now, identical goods and similar goods. I gave an example. Identical goods, similar goods. I gave example of Dell compared with Dell. In similar goods, Dell compared with Lenovo. Dell black color is compared with Dell blue color. I call this as a identical goods. I call this as identical goods. Similar goods. Dell features compared with Lenovo features. Why? That point in time, there is no other party product to compare. So this was one example you need to remember for identical goods and similar goods. Transaction of identical goods are sold into India, imported at about the same time as the goods being valued. So they are saying pick the identical goods which are sold at the same time. Sold at the same commercial level, substantially the same quantity. If sold at different commercial levels or quantity, adjustment to be made for difference. This one particular point, we have examined where there is no price. There is no price. I gave an example for trust which has imported books. A trust which has imported books without payment of duty. I have various quantity imported. I gave an example where 1,000 books were imported, where 4-5 transactions are there. The quantity which is matching close to this particular value in transaction, I take only of those goods. When I take only of those goods, whichever is the lowest transaction value, that should be considered for transaction value. And they are saying adjustment can be done on account of distance, which is meant for transportation. So I do adjustments for transportation, and whichever transactions value are available of the given choices, the least value I'll be taking into consideration. Examination. One question for 2 marks. One question for 2 marks can be expected on the basis of values at different commercial level. At different commercial level. Institute material, there is one example based on rule number 4. Please revise this particular example. This could be one of the model which could be tested. Moving further, in case of similar goods, mutatis, whatever we have discussed in rule 4, same is applicable for rule number 5. Rule number 6. If I don't get an answer from rule 3, rule 4, rule 5, I can travel to either rule number 7 or rule number 8. This traveling to rule number 7, rule number 8, at the request of the importer, first probably rule 8 can be examined, then rule 7 can be examined. This is a choice given to the proper officer. Moving further, rule number 7, deductive value. What they will say, find out identical goods, find out the commercial value. From that, you add some expenses, you deduct some portion. What will I add? Units price at which imported or identical or similar imported goods are sold in greatest aggregate quantity to unrelated person. So they just wanted to find out the price which is sold to unrelated party. From that, deduct commission or profit of general expenses, transport, insurance, and cost associated with India, which are within India, customs duty and other taxes paid in India. If these prices are included in transaction value, make an adjustment for these transactions. On theory, this rule 7 is there, which generally is not admitted for various practical difficulties. Rule 8, again, very good as a theory, but it doesn't work for inherent qualifications which are subjective in nature. Like I was giving one example, objectivity and subjectivity. Rule 8 is more subjective compared to objective. Reason? Whatever information proper officer has asked, we should be in a position to give for the proper officer to compute this value. What will I do as a proper officer? Assuming for a moment, I'm an importer. I came to you saying that, Mr. Viraj, look, this is a laptop I have imported. Can you do me a assessment under rule number 8? Then what does Viraj as a proper officer can do? He'll ask, cost or value of material and fabrication of the processing employed in producing the imported goods. I need complete details which are relevant for manufacturing of imported goods. This is at country of export. Country of export. What I need? Cost or value of material, fabrication and other processing employed in producing the imported goods. More or less, your cost sheet is something which is required. Now, tell me which exporter is going to give you a cost sheet unless the exporter happens to be a related party. Then, profit and general expenses usually reflected in sale of goods of the same class of kind of goods made in the country of exportation. Now, this is a expectation which, like in India, a chartered accountant has to certify that this is a general profits loaded on this particular value. A cost auditor, a cost accountant has to certify this is a cost sheet. So both the certificates of CA and CS together needs to be traveled to convince this particular proper officer. Based on that, this is a notional addition. This is a notional addition on the basis of rule number 10. Considering these three values derived, which is called computed value. Examination, a theory question from this particular rule number 8. 4 marks theory question. Examine the provisions of rule 8, which is used for computation of value under customs law. So here, you're expected to explain that when the transaction value under section 14 subsection 1 has not been attained because of one, price is not the sole consideration, or because of influence of a related party transaction, the assessee has to travel from rule 3, rule 4, rule 5 to find out the relevant transaction value. If not permissible, then the proper officer shall resort to rule number 8. Then you will explain that in rule number 8, the proper officer will ask that the cost or value of materials, fabrication, design, or other processing charges employed in producing this particular product. In addition to this, the profit on general expenses usually reflected to this particular thing. And loading in relation to values referred in rule number 10. All this for explaining, I'll get 4 marks. Examination, expect always the unexpected. So this could be when the examination, your question paper is made simple. You are going to write May 2024. Fingers crossed. No one knows the exam pattern. This being the first test paper in the new syllabus. Expect some average, questions from this particular syllabus. Fingers crossed. I'm just making a caution. Be prepared and be open for these kind of questions. Don't take it for granted that only this question will be tested. Then, valuation rules to apply sequentially. I travel from rule number 3 till rule number 8. Rule number 9, methodological. The principles and objectives laid in these rules will be applied for determining the transaction value. The master of all the rules, rule number 10. Please write down rule number 10 points. Remember these rule number 10 points. Examination out of 6 marks. Expect at least one adjustment for 2 marks from rule number 10. Rule 10 says cost to be added if not included. Catch point. Last class, we worked out one problem where Mansa asked design related question. Read the question carefully. If the question says the below expenses are not included in transaction value, then only you need to add them. I repeat, when you read the question, there is a reference to some of the expenses which are put in a bullet points over here. If these expenses are not included in your transaction value, that is your either FOB value or CAF value, whatever is given. If this expenses are not included, then you are requested to add back. Point number 1. Commission, etc., except buying commission, cost of container or packaging. So here, exclusion is your buying commission. Exclusion is buying commission. I've explained what is a buying commission. Examination, any commission referred as buying commission, no need to take into transaction. Repeat, whenever there is a commission which is referred as buying commission, no need to add back to your CAF value. Example. So what is a buying commission? Generally, buying commission is a expense relevant for me to satisfy myself before the goods are purchased. Like example, I'm an importer sitting in Tamil Nadu, sitting in Chengalpet, say Chennai. In Chennai, I need to import the goods. Now, these goods are manufactured in Germany. Now, the value of consignment is say 3 lakh. Sending my employee from India to Germany to stay there for a month's time, examine the goods and bring back the goods. The cost of the travel, stay, all put together comes to 1 lakh. Rather, if I can pay some 15,000 commission to some expert who can act as a buying agent on my behalf to test the goods, I call that as a buying commission. So buying commission is excluded from my transaction. This is point number 1. Engineering, design work, etc. undertaken elsewhere than India. Elsewhere than in India. That means in India, not to be included. Not to be included. Whichever is in bold, students, read these things pretty carefully. These are tested in your examination. Example, last class also we have solved a problem. I don't know how many of you have gone through my example which we have worked in the last class. If you have missed, I would recommend go back to the previous session. We solved one problem in relation to this design related expenses. Two examples in that, right? Then royalty and license fee as a condition of sale. As a condition of sale. Catch point. Whatever I have circled, please circle this particular point because this is tested. If this is not a condition, if this is not a condition, not to include, not to include. Let me just make some space and explain this point once again. In relation to royalty, royalty in general payable after production, Now, there are stages. Pre-production, post, instead of saying pre-production, let me just erase this one. I would say before commercial production, after commercial production. Now, this is a stage where setting up of factory is undertaken. Setting up of factory is undertaken. Assuming for a moment, there's a US entity which is setting up its production in India. So any goods imported, say capital goods or space, capital goods or space sent for setting up of the factory. On these goods, though there is a royalty agreement, this royalty agreement will start only after commercial production. That means to say, till my commercial production, setting up a factory is not done, I would not be paying royalty. So problem, just because there is a royalty, which is not as a condition of sale, please don't add that royalty in your problem solving. So how does the royalty say? Generally, they say 3% of FOB value. Say, as per the agreement, royalty is 3% of FOB value. Then, for rule 10 purpose, if this is not a condition of sale, don't add back. Wait and watch. And then, if it is post-production, the post-commercial production, add back. This is one catch point you need to remember. Let me see any doubts before I go further on rule number 10. Namrat is asking, sir, from where we can get that recent judgment? This Northern operating system, you can put it on Google, Northern, NORTHERN, operating system private limited. You will get it on Google. This is a very famous judgment. If the value of laptop is less than 5 lakh, then IGST is not applicable. Then what will be the impact of duty? If the value of laptop is less than 5 lakh, then IGST is... Namrata, I'm not clear with your question. No? I'm not clear with your question. And Namrata is asking, can you explain rule number 4? Okay. I'll do one thing. I'll finish rule number 10 and I'll come back to rule number 4 once again. Okay. So rule number 10, moving on further points. Proceeds of any subsequent sale accruing to the seller. All other payments as a condition of sale. These two are connected as consideration. Proceeds of any subsequent sale accruing to the seller. All other payments as condition of sale. Any consideration flowing back to the seller that needs to be added back. So these are the 5 points which are tested under rule number 10. Rule 10, transaction value shall include transportation cost loading, unloading, handling charges up to place of importation. Insurance cost. Now, to determine this transportation insurance, there is a thumb rule given. In case if your transportation cost is not available, they say 20% of FOB value. Examination, I said repeatedly in my previous session, computation of transportation is always on FOB, not on CIF. CAF is not to be taken. Only free on board has to be taken into consideration. Similarly, if insurance cost is not ascertainable, then they say insurance will be 1.125%. My insurance will be 1.125% of FOB value. There is a cap of transportation by air. In case of goods are imported by air, my ceiling of transportation is 20% of FOB value. Say actual freight is say $4,000. $4,000. And say FOB value is $10,000. As per rule number 10, my freight cap is 20% of FOB. That is 2,000. Though my actual freight is 4,000, applying this particular rule 10, in case of goods imported by A, where transport, loading, unloading, and handling charges is ascertainable, such cost shall not exceed 20% of FOB value. Such cost shall not exceed 20% FOB value. So examination, 2 marks when you solve a particular problem. 2 marks will be an adjustment on the basis of your freight and insurance. Your freight and insurance. So if freight and insurance is missing, you will calculate 20% of FOB value. So what if freight is available, which is through A, then there is a cap of 20% of FOB value. So please, whatever problem you solve, expect one adjustment on this rule number 10 aspect. Moving further. Cost of transport of the imported goods include ship demurrage charges or chartered vessels, lighterage or barge charges. This was one example I was giving. Lighterage or barge charges where from a big vessel, goods are loaded. Big vessel, goods are loaded into smaller ships. These are smaller ships or boats. Why is that? There is a harbor where there is no space available for this vessel to come. So from seashore, that is territorial waters, goods are transported using these ships or boats, which is called as a lighterage or barge charges. These charges are to be included. Till the place of importation. This would be one question where 1 mark is a weightage given for this particular adjustment. FOB price plus rule 10 adjustments is my customs FOB value. Accessible value, FOB value plus rule 10 adjustments, I'll get my CAF value. This is how rule 10 is calculated. Now, Namrat is asking rule number 4. Let me just see any doubts before I travel further. Northern operating system is available at BAR. Which BAR, Mansa? BAR Council? Okay. This is available in Google also, Mansa. When Harshit is asking this question, sir, insurance, whether to consider 1.125% or take it is given and the problem. Insurance, Harshit, if it is given, take actuals. If it is not given, then calculate 1.125. Only in case of transportation, there is a ceiling. Insurance, there is no ceiling. Let me come back quickly to rule number 4. Background, Namrata, identical goods, transaction value of identical goods. I'll give you 2 examples. If you remember these 2 examples, it will be pretty easy for you to understand. Example number 1. Say Dell laptop to employee and to unregistered person. This is example number 1. Example number 2. A trust imported, say, probably let's say computer without any consideration. That means value is not available. So example number 1, influence of related party number. Example number 2, price is not available. Goods have come. When a computer comes to India, just because trust has no consideration to be paid to the exporter, the goods cannot be freely allowed to come into India. Any goods which are coming, Section 12, levy gets triggered, customs duty needs to be paid. For the purpose of ascertaining this customs duty, I'll come to rule number 4. In rule number 4, the base, the hunch point, the catch point is your identical goods. Identical goods. What is identical goods? I can compare apple to apple. I can compare apple to apple. When I compare apple to apple, features are same. Like I gave one example. Say Dell laptop. I'll say Dell laptop 1, Dell laptop 2. Size, say 16 inches. RAM, 5 GB. Hard disk, 512 GB. Then processor, i6. Color, blue, black. Now, this would be called as a identical goods. Barring the color, these goods are comparable, right? This is one example. Or in case of this example, say black laptop imported by employee, black laptop sold to unrelated party. So either of these 2 could be considered as an example here, which is called identical goods. What they say, transaction value of identical goods sold for export to India. So they say, this is my starting point. Take the transaction value of the identical goods which is sold for export to India. This is my step number 1. Step number 2. Imported at or about the same time as the goods being valued. So these goods should have been imported about same time. When I say same time, it could be 30 days prior, 30 days later. Generally, up to a period of 90 days, the bandwidth will be taken by the proper officer. Sold at same commercial level and substantially same quantity. Commercial level, quantity. Now, when I say commercial level quantity, one laptop is sold to employee, one laptop is sold to Namrata. Commercial level. Employee is individual and Namrata is individual. Quantity, both are comparable. Similarly, in case of example number 2, in case of a trust, say trust has imported 50 computers. Now, the same point in time, if there are computers for 60 numbers, 70 numbers, say 200 numbers. Now, there are 3 transactions which are there in the customs portal. When you compare commercial and quantity, this quantity is more, I'll ignore this. I'll take into consideration these 2 transactions. They say sold at the same commercial level and substantially the same quantity. If sold at differential commercial level or quantity, adjustments to be made for the difference. So I'll take whichever is quantity wise and commercial wise, comparable. Adjustment to be made on account of difference in distance. If there is any distance, say in this example, To employee, employee, it is coming from, say, let's say Las Vegas. And to this unregistered person, this is coming from, say, Japan. Now, the distance between this and this needs to be adjusted. In case more than one transaction value of identical goods are available, in this example, you have two transactions. When two prices are available, lowest value shall be considered. What is the value for this 60 pieces? What value is for 70 pieces? Whatever per unit piece is there, the least of these two will be considered as my transaction value. This is my explanation for rule number 4. Let me know, is this clear? Number one. Other students, you have any doubts on this particular rule number 4? Please let me know. Right? Okay. Number this is clear. Okay. There's one question lined up in relation to rule number 4. One interesting question, valuation, the related party transaction. Namrata says that gift by employer to employee up to rupees 50,000 is not taxable under GST. Please link this with the previous query in relation to valuation. Very, very interesting point from GST to the customs law. The value of 50,000, which was referred in my schedule number 1, is no way relevant to my customs law. The moment there is a related party transaction, the valuation will be at question. Unfortunately, the provision of exemption up to 50,000 under GST law is not carried forward to customs law. So this element of value, Namrata, is no way connected with customs. Even 20,000 worth commodity is imported, related party transaction gets triggered. Hope this is clear, Namrata. And I'm happy you brought this comparison both under GST and customs law. Harshit is asking this question. So in study material problem, they are not considered as it's given in problem. They are calculated by 1.125%. If I take, okay, let me come back to this rule number 10. Let me recap on this rule number 10, Harshit. Insurance cost. If insurance cost is not ascertainable, insurance cost is 1.125% of FOB value. If customs FOB is not ascertainable, but customs FOB plus transport cost. If customs FOB, customs free on board is not ascertainable, but customs FOB plus transportation cost is ascertainable, insurance cost is 1.125% of customs FOB plus transportation cost. So in this case, provisions are saying that whatever is the FOB value on that 1.125% you have to take. If customs FOB value alone is not ascertainable, but FOB plus transportation cost is there, both together 1.125% I have to take into consideration. This is my insurance cost under rule number 10. Key points regarding transportation cost. Now only in relation to air, there is a cap. Let me change my color. Yeah. Only in relation to air, not to exceed 20% is given. Imported by sea or transshipped to another customs station, cost of insurance, transportation, loading charges, etc. shall be excluded, which is in India. Transportation cost does not include freight from port to ICD. This is also in India. So in relation to insurance, Harshit, there is no capping as such. Only for transportation, there is a capping. Right? If you have any different answer, let me know. I'll explain once again. Rule number 10, I have explained. Rule number 11, It's just a declaration. Whatever values I have given, it's all true and correct. There's no concealment, and information available is made put to the officer for deriving on transaction value. Rejection, any reasons a proper officer has a reason to believe your value declared is not correct, he will bring on record that because of so reasons, I don't agree your transaction value. And he will mention and reject your transaction. Export goods, similar provisions of import, like whatever the value is declared, if it is not related to party, price is the sole consideration, that will be taken into consideration. In case if it is not so, adjustment will be done for the transaction value based on like goods and identical goods and similar goods. Computation based on cost of production and charges, value will be calculated. Residual method, on the basis of general principles in line with the above provisions, residual method will be resorted to. Rejection, as per your Rule 12, here also proper officer may reject, and this is only a theory. Generally, we will not come across this sort of rejection. Then like this is your mixed supply under section 8. If there are goods, determination of goods, duty on goods, which consists of a set of articles. Like we had section 8 under GST, which talks about your composite supply. Similarly, articles liability duty with reference to quantity, chargeable to that quantity, that duty. If there is a reference to each quantity and price, take that price, that quantity, charge duty on those goods. Articles liability duty with reference to value. There's a combination. There is a combination of articles where individual price is not given, all put together value is given. Then liability duty at the same rate, chargeability duty at that rate, liability duty at different rates. If all articles are having same rate, no worries, apply the same rate. If one of the item is having one rate and another is having another rate, chargeability duty at highest of that rate. This goes with the logic of mixed supply. This goes with the logic of mixed supply. Like example, say there is a, let's take example of laptop. When a laptop is sold, laptop, your charger, your mouse, and let's say pen. There are 4 items sold together. Laptop is charged at the rate of say 15% ad valorem. Charger is charged at the rate of 15%. Mouse is charged at the rate of 15%. Pen is charged at the rate of 12%. When I have all 4 put together for a price of 40,000, provision says that if all are having same rate, apply that rate. If one of them is having a different rate, whichever is higher rate of duty, apply that. Articles are not liable to duty. Chargeability duty at the rate at which articles liability duty with reference to value. Out of these 4 items, assuming this is not dutiable, this is not dutiable, this is not dutiable, this alone is dutiable. So whatever duty is applicable for this item, the same is applied on entire value if it is sold in sets. This is in relation to articles sold as articles. Any accessories or parts sold along with main article, those articles and implements or parts will also be subject to the main article. Now, this is a recap of your valuation rules. Now, quickly, couple of problems I've set for our practice. Just let's do a recap of these problems and let's come to the procedural aspects of today's discussion. Hope you are able to see my screen now. Question number 1. On the basis of given information, calculate what is the value relevant for customs duty under section 14. From the below information, compute the value of goods to be assessed for customs duty. From the given information, they wanted the value of imported goods to be calculated into INR. CAF value of goods, $850. Conversion rate on the date of bill of entry, 12th August 2021, is $1 is worth INR 76. That is on the day bill of entry is filed. Conversion rate on the date of entry of vessel, that is 20th August 2021, $1 is worth INR 78. Conversion rate as per authorized dealer is $1 is worth 74 rupee 50 paisa. From the given three choices, please calculate what is the value of this product in INR. What is the value of this product in INR? Ascertain the customs value. I'll give you a minute's time. Please give me the answer. Namrata says 64,600 rate on the duty of bill of entry. Okay. Others, what would be your answer? One answer is there. Be quick. Ravi, Mansa, Edupundulu, Harshit. Yeah. Harshit also says 815 to 76. Both of your answers correct, man. For the purpose of conversion into INR, the day on which bill of entry is filed, that is important. So answer would be on the basis of bill of entry 76 into 850. I would get 64,600 INR. 64,600 INR. Let's move on to question number 2. FOB value of goods exported, Singapore dollar 1100 and 450. 1100 and 450. For given this foreign currency value, the conversion rate as per RBI is 1 Singapore dollar is worth INR 65. The conversion rate as per customs on the date of shipping bill is INR 66 per Singapore dollar. Rate prevalent on the date of let export order is 1 Singapore dollar is equal to 68 INR. Let export order is an order passed by the customs authority, for letting the goods to be exported. So here you have three choices. FOB value of goods exported is Singapore dollars 11,450. I need this to be converted into INR. So what would be your answer? What would be your answer? Namrata, Harshit, Mansa, Balaji, Ravi. All of your answer is correct, ma? For point number A. I will pause my video for a minute. Just give me 7,55,700, 7,55,700. Good. All of you have the same answer. So the value as per filing shipping bill is relevant. So I'll say 66 into 11,450, 7,55,700. This would be my value of conversion for the purpose of customs duty under section 14. Moving on. Based on section 14 read with rule number 10, this is the question set. Compute the value for purpose of assessing customs duty. The amount given is in dollar. Duty payable on the basis of below information. Value of goods $23,500. Value of goods $23,500. Inspection charges before dispatch $450. Loading and unloading charges till port of loading $640. Insurance charges $280. Freight charges till place of importation $1,800. Exchange rate notified under customs law, $1 is worth INR 78. Rate of customs duty 35%. SWS applicable 10%. IGST applicable 12%. Goods are imported by air. Goods are imported by air. So on the basis of this information, you're asked to find out what is the value of goods assessable under customs duty. Also, compute the customs duty along with the social welfare surcharge and the IGST. In the information, they have given a note saying that goods are imported by air. So when the goods are imported by air, what does Rule 10 say and how do we do the examination? I'll give you 3 minutes. Just work out and give your answers. Now, FOB value is given or CEF is given. You need to understand on the basis of given information. Be little careful. Don't get confused with the given data. Mansa, I have missed one of your document. After this problem, I'll take up your question. So when you are solving, first give me what is the FOB value, what is the CEF value. If you can give the final answer, that is also well and good. Very good. First answer, Namrata says 41370.50. Okay. Uh, 41370.50 is the total value, Namrata? Cross check, ma. What is that value? 4,13,000. Acha. FOB value is 24,590. Good. Good, Namrata. First answer, Namrata has given 24,590 is the FOB value. Harshit says FOB value 19,18,020. CAF is 20,80,260. Duty payable 11,46,639. Too good, ma. Too good. Keep it up, Harshit. I'll wait for one more answer from any other student, then we will discuss. Both Namrata and Harshit, you're on right track. Mansa, Edukondalo, Ravi, Shailesh, Prerna, Viraj. Good. Rahim says FOB value 24,590. Right. CF value 26,670. Very good. I guess all of you are having the proper answer. So what I'll do, I'll just discuss this particular problem. Given information, I'll just read the answer and then explain once again. Hope you're able to see my screen. Yeah. Value of goods, they have given 23,500. Problem doesn't say value of goods including transport, including insurance, including design, nothing. It just says value of goods. So let's go with that. Value of goods is value of goods. Inspection charges before dispatch. Now, till the goods come to customs, inspection is something which is important, but it has to be loaded. So for the purpose of free on board, this also to be taken into consideration. Loading and unloading charges till port of loading. Very important. Free on board. Any expenses till the goods are put onto the board are relevant for me. So all these three expenses put together, I'll get 24,490, which I call as FOB value of goods. $23,500, $450, $640. This is called FOB value. So why FOB value is relevant? Rule 10, Arshit asked this question. In Rule 10, there was a cap for air freight. Is there any cap for insurance? Answer is, Rule 10 talks only about cap on my air freight, not in relation to insurance. So what am I doing here? My freight charges as per Rule 10, actual amount is 1,800. The restriction is on FOB value 20%. Since the actual freight is less compared to this amount, I'll take actual amount. I repeat, the ceiling given under Rule 10 is 20% of FOB value. So here, least of these two, minimum 1,800. Then insurance, whatever actually is there, I have taken into consideration. Value in foreign currency, that is CIF, all put together 26,670. Namrata, Rahim, and Harshit, all of your answers are correct so far. Then examination, the value for INR purpose, customs rate, they are given 78 per dollar. So 2670 into 78, I'll get 20,80,000. On this basic customs duty, the question they are given the rate of duty is 35%. On this value, 35% happens to be 7,28,091. On this social welfare surcharge, 10% loaded. All this together with this value, I'll get the transaction value for IGST. My basic value in INR, that is CAF value, basic custom duty, social welfare surcharge. All these three put together, the transaction value for computation of IGST, 20 lakh, 28 lakh, 81,000. On this IGST at the rate of 12%, I'll get 3 lakh, 45,000. So my total customs duty is 7 lakh 28,000 plus 72,000 plus 3 lakh 45 comes to 11 lakh 46,000. And my total amount, including your IGC, is going to be 32 lakh 26,899. Only for duty point of view, customs duty payable 7 lakh 28 plus 3 lakh 45,000. This is my answer. Let me see any doubts so far. Okay. Good question. Namrat is asking one point. Sir, can we call this point number 2, $450 as buying commission? They said inspection charges before dispatch. Now there is no clarity whether this inspection charges are paid by seller, that is exporter, or importer. At times it so happens, Namrata, probably, I don't know how many of you have seen the transactions when you do your internal audit. When there is a steel purchased, along with the steel, there is a inspection report which is given for as a quality check. This inspection report, which is called as a quality report, this is one compulsory requirement from the buyer's end. So seller will say, look, I don't need to have this report because you want, I'll get it done. So charges paid by the importer, sorry, exporter on behalf of importer. So at times this could be a contractual agreement, not be a contractual agreement. Until and unless it is mentioned as buyer's commission, that is buying commission, don't exclude anything from transaction value. So if it is a buying commission, exclude them. If it is not buying commission, include that for valuation. Hope this is clear, Namrata. There's one point which was referred to this after Rule 10. We discussed on this Section 8 composite or mixed supply in relation to items which are sold as space or articles together. So Mansan is asking this point. Set of articles, Section 8 can be mixed or composite supply. So in case if it is like when the set of articles are imported, at times it could be mixed supply, at times it could be a composite supply. Like example, for me to operate my laptop, I need to have laptop and charger and the mouse. So I can say that the mouse and the charger, if I have individual price rate, I'll take individual price rate, individual duty rate. All these three put together, sir, it is a composite supply. Then whatever highest rate is there out of these three, that will be applicable. Mixed supply. Anyway, mixed supply Section 8 says whichever is a higher rate. The same concept is borrowed into customs law. When articles are assembled together, when each article has a different rate, whichever is having a higher rate, the customs law says that apply that higher rate. This is one point which we need to take from Section 8 in case of mixed and composite supply. Harshit is asking one doubt. So give an example for non-dutiable goods. Non-dutiable goods, let's take example of DRDO items. Say there is an explosive chemical. There is a chemical which is used for manufacturing explosive components. So I have say gunpowder. I have say a particular rifle. I have and probably say booklet, manual. I have a rifle. I have a gunpowder. I have a manual. Say gunpowder and rifle used by defense are exempted. Used by defense are exempted. However, the manual is not exempted per se, right? So I have a combination of dutiable and exempted. In that scenario, because one item is taxable, that is dutiable, and others are exempted, whichever is the highest rate of duty is there, that shall be applied. Not all the time. Other alternative you can think of is your agricultural produce generally. uh, agriculture produce is one an item. Along with agriculture produce, if you get say pesticide, which is dutiable, I have agriculture produce combined with pesticide combined together comes as a consignment. Whichever is highest duty is there, that shall be taken into consideration. Hope this is clear, ma? Huh. Namrata, composite supply, mixed supply. When I say this, the analogy which is there in section 8 gets applied even in customs law. When a set of articles are imported, I just see one thing. All the items, same due, same rate, apply the same rate. Any one of the item is having a different rate, different customs duty, apply that particular thing. Very simple. And I just gave an analogy of section 8 for remembering this provision. The provision says in very simple terms, when you have three, four items coming as a set of articles, all these articles have same rate of duty, apply the same duty. Any one of the item has got a different rate of duty, then that will be applicable for assessment of duty. This is what we need to apply in customs rate. Noted, Mansa. Take care of yourself, ma. I understand the situation. Let's come back to our topic for today's discussion. 1.5 hour went for our recap, but it is worth it from examination point of view. Topic for today's discussion: baggage rules, transit and transshipment, special provisions relating to stores, basic procedures of import and exports, custodian of goods and their responsibility. These are the 4 topics which I'm going to discuss on today's topic, where 1 mark problem maybe on baggage rules, 1 mark theory on differentiation between transit and transshipment may be tested. Students, we are at 7:34. Let's have a 10 minutes break. 7:44. Let us resume back. Let us start with our today's discussion on this topic called import and export provisions, miscellaneous provisions, transportation of goods, transshipment, and transit. These are the miscellaneous topics which are there. Let us draw attention to. Let me just check the material. Study note number 5. Study note number 5. Importation and exportation of goods. Importation and exportation of goods. This particular chapter, what is that you're expected to learn? I'll just give you the overview and then we'll get into the subject. In this particular chapter 5, we are expected to learn the statutory provisions which are connected with import and export. When I say statutory provisions pertaining to import and export, basic aspects like who can file a bill of entry, what is the responsibility of a custodian of a ship, vessel, or aircraft, or a vehicle. What is the import manifest, import report, within how much time the report has to be filed, what is the mode of filing, is it electronic, is it online? So these are all basic aspects. Like I would say, you can read as a basic recap of provisions concern. This is just to learn or just to understand the context how the goods are imported, goods are exported. Then comprehend the duties and obligations of a person in charge of a conveyance bringing the goods into or taking goods into India, into or out of India. So here they talk about responsibilities and duties and obligations of a person in charge of a conveyance, like the person who's called as a master, who's called as a pilot, who's called as a driver. So these persons, what are the responsibilities they have been casted? How to keep a register, how these goods have to be reported, and once reported, how goods are loaded into the custody and which are meant for transshipment, how a record is maintained for those goods, which is meant for transit, like not to be destined in this India, rather the goods are meant for destiny into another foreign country. So what is their responsibility in general? Then understand and apply the procedure for clearance of imported goods and export goods. When I say procedure, again, this is a basic aspects where how does the bill of entry is filed, how the goods are taken into warehouse. When the goods are taken into warehouse, what is the activity which can be undertaken on those goods? What is the point in time when the duty has to be paid, etc. Similarly, for goods exported out of India. Understanding provisions related to postal articles. In general, how does the post office operates for the goods imported, exported, and the provisions connected with documentation. This is also a general walkthrough of provisions. Understand and apply the procedures relating to clearance of baggage. Now, this is one important topic which is generally tested in your examination for 3 marks. Baggage. This is one aspect. Why? There are connecting provisions. How do we understand baggage? What are the monetary limits mentioned, specified in relation to baggage? Definition of baggage, maybe for 2 marks. This is one area which could be tested in your examination. Analyze the statute provisions pertaining to transit and transshipment. What is the difference between these two words? Transit, transshipment. So examination, one theory question could be expected from this particular term called transit and transshipment. So these are the two topics which I would be focusing much in detail in the next 1 to 1.5 hours for making you to understand the provisions connected with this. For the given paucity of time, I think baggage we will cover in detail to understand in a better fashion. And Harshit, I noted your point, Mark. The next topic, what we're going to discuss, will not be much time. This is a very small topic called a refund under customs law. So what I would do, today's session and tomorrow's, the next coming session, I would be allocating for these two topics. One is connected with baggage rules, transshipment, and connected with your refund under customs law. These are the three topics which would be spreading across 2 sessions from now. Let me come back to my study material, that is a presentation connected with baggage provisions. Any doubts before we start with this? Just let me have a quick read. Let's start with baggage provisions. A simple definition: baggage includes unaccompanied baggage but does not include motor vehicle. Baggage includes unaccompanied baggage but does not include motor vehicle. Examination: this question alone will be tested for 2 marks in a MCQ. So the above definition, when you read, it starts with the term includes. So that means it is an inclusive definition and excludes motor vehicle. So examination, a point of testing is on this element. Like example, to say, Mr. X, a tourist, visits India on a vacation for a span of 3 months. On his vacation, he gets along a personal car for commutation in India. For commutation in India as baggage. Examine the relevant provisions of GST law. Very simple thing. They say that Mr. X, who happens to be a tourist, he has come to India for a span of 3 months. He gets along with him a personal car for the purpose of commutation in India as a baggage. Now, when I read the definition of baggage, it says baggage includes unaccompanied baggage, but does not include motor vehicle. But by virtue of exclusion, this cannot be called as a baggage. This cannot be called as a baggage. Reference to personal belongings, household items, gifts, souvenirs, as per for discussion. So here, when I say inclusive definition, this baggage may include 1, personal belongings. So what do you mean by personal belonging? Say my used clothes, my bag, my laptop, my any other household items. Or I could also have some gifts and souvenirs which is carried as a baggage. In general, if you see, when you go on a trip, you pack your bag. What items you can imagine to be part and parcel of that bag can be called as baggage. I repeat the example. When you go on a trip, you pack your bags. All those articles you can imagine to fit into your bag is called as a baggage. So I went to visit Agra, Taj Mahal. In Agra, I purchased some gifts and souvenirs. What do you mean by souvenirs? Like the beauty and the sculpture and the background of Taj Mahal is printed as a souvenir. In memory of visit to Agra, I purchased some monuments for gift and also I purchased a souvenir. This gift and souvenir which can be put into my bag can be called as my baggage. Right? This is an example. Now, one item which is not covered is called unaccompanied baggage. That could be an item, that could be a baggage, that could be a baggage which came early or afterwards. My baggage which came early or which came afterwards. Example. Let's take example of, say, Shailesh. Shailesh is getting married. Say, Shailesh happens to be working in Singapore. His marriage is due in Feb 2024. Just a hypothetical example, Shailesh. Don't no, take it otherwise. Just a hypothetical example. Or I'll refer. Say Krishna. Krishna is working in Singapore. He has to come to India during Feb 2024 for his marriage. So what happens mid of Jan, last week of Jan, Krishna does shopping. He buys clothes and accessories, and he sends the clothes well in advance to India. Now, that's a unaccompanied baggage. My bag, company, I mean, there's no company. It's coming prior to me or it is coming after me. Oh, this is example of early. I sent the goods early. I'm supposed to come on first week of February because luggage is more. I packed in transport and I've sent this as baggage, which is called unaccompanied baggage. Afterwards, Krishna came to India. After coming to India, he realized that the suit which he has purchased for his reception was left over back in Singapore. The friend of Krishna, said Balram, packs this particular suit and sends to India. That's called afterwards, unaccompanied baggage. Now, so why is that we are referring to this term called baggage? Reason, reference to section 12. Any goods imported to India. So when Krishna comes to India, Krishna is not coming alone. Krishna is coming along with his baggage. So, for the purpose of customs duty, separate provisions are there carved out in relation to baggage. That's the reason we study baggage provisions separately in detailed manner. So, this is a preamble for me to explain you. Includes, excludes, unaccompanied baggage. So, point number 1 includes. Point number 2 does not include. Point number 3, unaccompanied baggage. So all these 3 are forming part and parcel of one definition called baggage. Import General Manifest or Export General Manifest, person in charge of a conveyance to file IGM, PIC. I use a shortcut called person in charge, PIC. Person in charge of a conveyance, mode of transportation through vessel, through flight, your flight. The person in charge of this conveyance has to file Import General Manifest, Export General Manifest. In both the cases, baggage goods are required to be declared in separate sheets. Baggage goods required, it is compulsory to be declared in separate sheets. So here, when any goods are coming into India, when any goods are going out of India, there's a declaration which is called IGM or EGM. So what is IGM? What is EGM? This is a declaration for goods which are outbound, goods which are inbound. So why is that? For the purpose of section 12, lady, I need to have this declaration. And when the declaration is made, there's a differentiation made with respect to goods and baggage. So why is this differentiation? Because there is a special treatment. For that purpose, baggage is defined to be declared separately, right? So this is a declaration which is done by a person in charge of a conveyance. Now, so how does it happen? Now, to get example on this, let's take example this way. Krishna is going to travel from Singapore to India. So when he is coming through a flight, what he does, he gives a declaration that, look, these are the goods which are meant for luggage, which is called baggage goods. Now, there are personal belongings, there are goods which are subjected to customs duty. So he's going to declare that these are the goods I'm going to carry along with me. Personal belongings and goods which are subjected to duty. A classic example. Say, Krishna is going to get a particular machinery. He wanted to bring a machinery which is used in, say, testing of milk content. water in a water content in milk. So Krishna is importing a machinery which is used for a particular scientific purpose. And this particular machinery is not his personal baggage. He cannot call. So he'll say the goods which are brought along with the baggage goods, separate declaration is given. So he's going to say, these are my personal belongings, these are my baggage goods. Declaration by owner. So that particular declaration which is given by the owner, owner of any baggage shall, for the purpose of clearing it, make declaration of its contents to the proper officer. So he's going to declare personal goods, say purchased item, then probably gifts, then your jewelry. The goods which are subject to duty are generally given as a declaration in your section 77 using a particular form. This particular form is relevant for this particular person in charge who files in this IGM or EGM. So the customs officer, that is the proper officer under customs, gets to know the goods which is coming into India, which is going out of India through IGM or EGM in relation to baggage goods. In relation to baggage goods. This is a starting point. I don't know how many of you have watched these movies. The persons who come from abroad, the customs officer in movies like in South Tamil, there is one movie of this actor Surya. Surya happens to be a computer tech savvy. He does a couple of mischief in the beginning of the movie. Later, he becomes a support hand for customs officer for inspection of various items. So when you travel, there's a green channel, there is a non-green channel. Green channel, I am coming without any duty-free goods, without any duty payable goods. So let me allow without payment of customs duty. There's one more channel where I come, I declare that I brought these goods, let me pay my customs duty. General example, alcohol, cigars, CDs and cassettes, a point in time. Now it's more of media, the design, architectural works which is put into a CD, which is coming as goods. So all those items which are subjected to duty, I bring along, I declare them as baggage goods for the purpose of payment of duty. So this is how baggage goods comes into my importance for payment of customs duty. Rate of duty and tariff value. The importance of these baggage goods is the general rate of duty, 35% ad valorem, is applicable for my customs duty purpose. When I import these goods into India, I have to pay some element of duty. So this particular element of duty is calculated on the basis of declaration. The rate of duty and tariff valuation, if any applicable to baggage, shall be rate of valuation in force on the date when the declaration is made under section 77. The day I file my declaration, that will be the relevant date for the purpose of computation of duty. So the regular rate of duty is 35% ad valorem. So whatever value you are going to declare, 35% would be the rate of duty. This rate of duty is not applicable to firearms cartridge of exceeding 50. There is a reference called Annexure 1. There is a reference called Annexure 1. Any goods which are carried as per Annexure 1, though it's carried as baggage, in excess of the quantity which is specified therein, will be subjected to regular rate of duty, which we regulate to regular rate of duty. So only for baggage, 35% ad valorem is the rate of duty. General exemption. In case of baggage, the proper officer may, subject to the rules made thereunder, pass free of duty for specific baggage. Now, this draws your attention. Customs law, the way, just to give a background, Generally, when any of your relatives meet you in any function, whenever there is a family get together, say you happen to be a chartered accountant final student, and if any of your cousin or relative sees you, they come and ask you, yeah, I'm doing so and so business activity. Should I need to pay income tax? I'm willing to sell this particular property. Should I need to pay capital gains? I'm importing a particular machinery. Do I get a benefit of input tax on that particular machinery? Is there any way machinery can be imported without payment of customs duty? So there are ways which questions are asked expecting that you are expert on tax laws. So one of them is this particular baggage provisions where there are specific rules where there is a specific exemption for baggage. This draws your attention why we study in depth the baggage provisions. So rule 3, rule 4, rule 5, rule 6. I'll come to those rules in a short while. Those rules have enabled on a particular point in time when you can enjoy exemption from payment of duty. Personal use of any article in the baggage of a passenger or member of the crew. Personal use of any article. Personal use of any article in the baggage of a passenger or member. This draws attention for complete exemption. When I have goods brought in as a personal use, like example, I go to Singapore. I have stayed there for a month's time. During the stay, I have purchased for my living clothes and apparels. I have purchased a pair of shoes. I have purchased few items for my survival. So when I come back, what will I do? I bring back my shirts. I bring back my shoes. I bring back those personal accessories. Now, those are personal use goods. Those have a special attention in case of baggage provisions. Only personal use goods. Then, any article in the baggage, use of the passenger or his family, or is a bona fide gift or souvenir. I can bring items as gift or souvenir. Souvenir, like as you all know, it's like a small booklet which is referred to the historical places where you visit. You try to buy to learn more about that particular place. Gift, any items or articles which you purchase to be given to your family members. Like example, when you go to a particular bazaar, you'll buy some sari for your mother. You'll buy some bangles for your sister. You will buy some pair of shoes for your brother or father. Some pair of clothes for your kith and kin. So there are multiple items which you buy as gifts. Those gifts also form part of my baggage. That is also given a special treatment how to be valued. So value of each such article and total value is within the limit specified. Value of each article and total value is relevant for these rules which have been formulated. Now, baggage provisions. My baggage can be identified. This is the first level of classification. What is that classification? Baggage may be for passenger, baggage may be for a member or crew. Like example, when a flight leaves Singapore, comes to India, flight from Singapore picks the passengers from Singapore, comes to India, embarks, the passengers are unboarded in, say, Mumbai. Again, from Mumbai, passengers en route to Singapore, they get on board. Again, the flight comes back to Singapore. Now, this particular journey, the fleet members, that's the crew of these members who travel in aircraft, that is a supporting staff, the pilot, and other staff who have to travel. These people can also have their baggage. So there are two kinds of baggage. Now, when the IGM, EGM has been filed, is it important only for passengers to be filed or member of a crew also has to be filed? Answer is both have to be filed. Reason, if member of crew is left aside, smuggling comes into picture through this member of crew. For that reason, baggage has to be declared for both the people separately. Now, when you think of member of crew, what could be the items of baggage? So there could be chocolates, there could be medical items, medicines, there could be personal clothing, personal shoe, chappal kind of thing. There could be some other your decorative items. All those items forms part of my baggage. Like example, scent bottle. When I come from Dubai, I buy a pair of scent which is worth say 50,000. Now it's something which is available at a 25% lesser price in Dubai compared to India. So if you leave out the member of crew, smuggling is something which is possible. That reason, both have to be declared. The another way of classification of baggage goods is personal effects, household effects. Third is your gifts and souvenirs. This is how my valuation rules in relation to baggage have been carved out. So one, personal effects. Personal used effects. Generally, when I say personal effects, like your clothing, your chappal, your medicines, your no other items which are required for upkeep and maintenance. Like example, your goggles. Like I use say two pair of goggles, one for study purpose, one for driving purpose. Again, personal used effects. My wristwatch, personal effect. I can have a wristwatch brand new purchased. I can have a wristwatch which is personal used. So how do I make out? Brand new purchased, it is coming like I cannot have two wristwatches to my hand, right? I can have only one wristwatch. So when I'm coming, one personal used wristwatch, one another item which is coming as a gift. Second categorization, household effects. When I say household effects, these are employees or uh, temporary work permit. Temporary work permit. Like people travel abroad for employment purpose. They stay for 6 months to 9 months or 1 year or 2 year. They come back after a point in time. Then they may have this household effects. So there are various rules covering these baggage provisions. Now, general duty-free baggage allowance. These are the items which are made part of your general duty-free allowance. I call this as duty-free baggage allowance. Shortcut, duty-free baggage allowance. Annex 1. These are the articles mentioned in Annex 1 allowed as a part of duty-free baggage allowance up to certain amount. What are included? Like not all items, only few items. Excluding. Now this is a exclusion. This is a exclusion. Or I'll do one thing. I'll just explain this annexure. When I come to the respective rule, you'll have a better clarity. Annexure 1, there is a reference to firearms cartridge of firearms exceeding 50, cigarettes exceeding 100 sticks, cigar exceeding 25, tobacco exceeding 125 gram, alcoholic liquor excess of 2 liter, gold, silver in any form other than ornaments, flat panel, LCD, LED, plasma TV. Then, okay. For ease of reference, let me come to your institute material. Let me refer this in the institute material. Just give me a minute. Study note 5. Yeah. Study note number 5, page number 5.55. Study note number 5, page number 5.55. Annexure 1. This is referred in Rule 3, Rule 4, Rule 6. As of now, just understand overview of this annexure. How do we use this annexure? I'll explain you in a while. When I say annexure 1, this annexure 1 is referred in these 3 rules. Firearms. Firearms is your pistol, cartridge of firearm, which is that bullets exceeding 50, cigars exceeding 100 sticks, cigarette exceeding 100 sticks, cigar exceeding 25. So difference between these two. People who smoke, they have better clarity. Cigarette, which is a normal, the white color, the tobacco leaf rolled on a white paper. Cigar, the tobacco leaf itself rolled in a circular thing, which is more content of tobacco. Cigarette, less content. Cigar, more content. Tobacco exceeding 125 grams. Alcoholic liquor or wine, excess of 2 liters. Gold or silver, any form other than ornament. Gold or silver, when they say any form other than ornament, this could be the pure or impure form. Like you have 24 carat, you have 22 or 20 carat. So I could have gold or silver, which is the pure gold or silver, or little diluted, other than ornament. When I say ornament, ornaments are dealt separately in another entry. So gold or silver in a raw form other than ornaments. Now please keep in mind, this is one important point which is generally tested in your examination. Gold or silver, any form other than ornaments. This is considered for examination of baggage provisions for 2 marks as a computation of duty on baggage. Right? So here, any item like say gold is carried in 24 carats, then it forms part of Annexure 1. I'll mention right here, included, excluded. What is excluded? Ornament. Now, ornament made of gold, ornament made of silver is excluded from Annexure 1. What is included? Gold or silver other than ornament. Now, when I say inclusion, this is in a pure form or impure form. Now, why is that we are discussing? Generally, when the goods are brought into India in this particular pure form or impure form, I will not consider as a baggage. When I don't consider as a baggage, what is implication? Customs duty is payable. Most of you, when you read the newspaper, you would read that drugs, especially this narcotics. We have seen again, I hail from South, so I've watched this movie of this actor called Surya, where the narcotic drugs, that is the drugs which are put into a small capsule, people swallow that capsule, they come, later they do surgery and remove that capsule. Very, very dangerous. So here, those items which are coming into India without payment of duty, they're not permitted. Especially when you see gold also. Like people will come as you are physically handicapped. When they're physically handicapped, they have this walking stick. In the walking stick, they put this particular gold in a particular places, like nuts and bolts. Nuts and bolts are made of gold. So all these items, which is not then other than ornament, it is not to be considered as baggage. When you don't consider as a baggage, the regular duty is applicable on that particular baggage. Then point number 6, flat panel, LCD, LED or plasma TV. Even this is not forming part of, this is included in my Annexure 1. So examination, when they test on gold and jewelry other than ornaments forms part of my Annexure 1. This is my Annexure 1. Then Annexure 2. Annexure 2 is referred in rule number 6. What is included in Annexure 2? Color television, video home theater, dishwasher, domestic refrigerator, capacity above 300 liters, deep freezer, video camera or combination of any such video camera with one or more of the following goods, namely TV receiver, sound recording reproducing apparatus, video reproducing apparatus, cinematograph films of 35 mm and above, gold, silver, any form other than ornaments. Similar to your Annexure 1, that is also brought here. Color television, VHD, dishwasher, domestic refrigerator of capacity above 300 liters or equivalent. Now, when I read this, domestic refrigerator of capacity, say 200 liters, that will not form part of Annexure 2. So, importance of reading these annexures, students, when I read what is included, what is excluded, you need to make out a difference for these two. Like, if you happen to observe the refrigerator, if you observe this dishwasher, dishwasher is a luxury. Refrigerator, I can have refrigerator right from 120 liter to 600 liter. Now, what is covered in Annexure 2? Above 300 liter. That means up to 300 liter is excluded. Now, when I say up to 300 liters is excluded, probably when I refer Rule 6, when it says excluding Annexure 2, that means if at all if there is a refrigerator which is having a capacity up to 300 liters, some other provision is to be considered. So from that point of view, when you read these entries, just keep in mind how to read what is included, how to read what is excluded, right? Let's move on to Annexure 3. Annexure 3. Again, this Annexure 3 is referred in Rule number 6. Video cassette recorder, video cassette player, video television receiver, video cassette displayer, digital video displayer, music system, AC, oven, word processing machine, fax machine, portable photocopying machine, washing machine, electrical LPG cooking range, personal computer, desktop computer, laptop computer, notebook computer, domestic refrigerator of capacity up to 300 liters or equivalent. Now, when I read Annexure 2, when I read Annexure 3, here itself, I can make a differentiation for entry number 13 itself. Domestic refrigerator up to 300 liters capacity. Now, the intent of the lawmaker is there are few goods which are essential. There are few goods which are want. So they wanted to make a differentiation between need, want. Like example, very, very basic example. Say your AC, washing machine. I'm just talking about basic examples. And say domestic refrigerator. AC, depending on the climatic conditions, this becomes a need. Washing machine, these days, again, it is a need. Refrigerator up to 300 capacity, it's a need. Above 300 liters, I would say this is a want. So, the customs officer, the provisions are making a differentiation what needs to be taxed, what needs to be not taxed, right? So, this is a background where reference to Annexure 1, Annexure 2, Annexure 3 is drawn. Now, Annexure 1, like firearms. Now, when I say firearms, there are a few MP, MLA or high net worth individuals where they have a permission to carry a pistol. Again, pistol, though it is licensed one, can it be called as a baggage? Probably, like no, this is a want, may not be. Cartridge of firearms exceeding 50, again, maybe a want. Cigarettes exceeding 100 sticks, maybe a want. Cigarettes not exceeding 100 sticks, maybe a not a want. Cigar, generally, like Schedule 4 items should generally not be considered as a baggage. Alcoholic liquor in excess of 2 liters, probably worldwide practice. Like in India, drinking alcohol is a sin, but even US, it is a norm. Like no, because of the climatic conditions, they take this wine, they take the liquor, which is just to keep their upkeep of body. Because of the given climatic conditions, they need to take some alternatives. Probably that could be the reason where alcoholic liquor excess of 2 liters is given in Annexure 1. Less than 2 liters, probably permissible. Gold and silver, again, other than ornaments means ornaments are permissible, other than ornaments, not permissible. Now, this is the background of Annexure 1, Annexure 2, Annexure 3. Now, I'll come to your reference of baggage provisions. Page number 5.49. Okay. Now, importance, when I say 35% ad valorem, let me just give one clarity before I miss out. Like I was giving a reference to, just let me introduce one slide. When I refer to baggage, the importance of your baggage is 35% ad valorem. So, assuming my baggage value is 20,000. 20,000 into 35%, I get 7,000 as a value. On this, assuming 12% is the customs duty, I would charge 840 rupees as customs duty. This is a ad valorem which is applicable only for baggage. If not baggage, 100% value for duty computation. This is one point I had to clarify in relation to your baggage provisions. Let's come back to material. Duty exemption given to baggage. Now, Section 79 of Customs Act refers to duty relief available in respect of baggage. It stipulates that proper officer may, subject to any rules made thereunder, pass free of duty article in the baggage of a passenger or member of the crew. Now remember that slide classification, baggage could be for passenger, baggage could be for member of the crew. So even member of the crew, when they come into the customs area, they make a declaration that these are personal belongings, these are dutiable goods, in respect of which said officer is satisfied, that is, it has been in his use for such minimum period as may be specified in rules. In his use. This is your personal belongings. So when I say personal belongings, that gives a comfort that it's a personal belonging, no need to charge customs duty on personal belonging. Any article in the baggage of a passenger in respect of which office is satisfied that it is used for the use of passenger or his family or is a bona fide gift or souvenir. Bona fide gift or souvenir. Provided that value of each such article and total value of all such article does not exceed such limit. So here, up to a limit, I am going to give a exemption that we are going to study now. Similarly, it envisages three classes of goods, namely personal effects, household effects, and gifts and souvenirs. This also I have discussed. Then subsection 2 of 79 enables the central government to make rules for carrying the provisions of subsection 1. It also stipulates rules for minimum period for which article has been used by a passenger or a member of a crew for the purpose of clause A of subsection 1. This determining as a personal effect. So for personal effects, generally, they presume that this should be the period. Maximum value of any article and the maximum total of value of article, which may be passed free of duty under clause B of subsection 1 in relation to household effects, gifts, gifts, and souvenir. So here, personal belongings exempted by default. Household effects and souvenirs up to a limit, up to a sum, you can enjoy exemption. This is the basic aspects which we need to understand. I'm going slow so that you'll not lose the attention on these particular provisions. Now, general duty-free baggage allowance. Before I start with rule number 3, let me see any doubts. One question from Namrata. Okay. A couple of points. I'll clarify one by one. I missed a lot of things. Just give me a minute. Namrata is asking, sir, please differentiate between goods and baggage. Hope this is clear by this now, Namrata. Goods and baggage, I give example where you go on a journey, what is put into the bag, etc. Right? Section 78, Namrata, just no, I'm going slow in whatever slides I have covered, the same by virtue of section. Don't get worried too much with section 78 and 79. Whatever I have put it in my PowerPoint presentation, just remember, like classification, like your what you call passenger, crew member. The next level of classification, personal, household, gifts, and so on. Now this is how the flow is. So just go with that flow. Don't get too much of confused on section reference. But not tension, they are coming in the same way to cover. Mansa, she says, in customs law, definition of family is the same as given in GST Act. Unfortunately, family is not defined. You have to go to the General Clause Act. Family includes, there is a hierarchy above, the layer, one layer above, one layer below. Whatever is covered in General Clause Act, the same is referred over here. Blood relation, right? Then Harshit is asking, sir, what is ornament? Ornament, any item which is made of gold and silver. Example, the chain which you put in, it's an ornament. The ring which you put on, it's an ornament. The earring, ornament. Nose ring, nose stick. All these are ornaments. Items which are wearable by a human being. That's called ornament, right? This is an example. Namrata says, if someone who is going with wearing gold ornament, and while coming back, they are wearing the ornament, then personal effects, I had to cover this classification, but you're one step ahead. I'll put this question once again. Namrata says, people are going with gold ornaments and they're coming back with gold ornaments. Then, very good question. Annexure 1, Annexure 2, Annexure 3. Namrata, question to you. I have gone with 10 ornaments. 10 ornaments. Chain, 3 chains, 2 earrings, 5. Say, take example of women. Say 3 chains, 2 earrings, 1 nose, and say 4 rings to the hand, or 2 rings to the hand and 2 to the leg. All put together 10. While coming back, the lady has come back with same 10 ornaments with say 50 grams of 24 karat gold. Now when she's coming back, 24 karat gold is not an ornament. So if it is not an ornament, it is covered in Annexure 1, Annexure 2. If it is covered in Annexure 1, Annexure 2, probably it is not eligible for exemption, which we are going to study. What if The lady has gone with 10 ornaments. She went for shopping. She bought one more ornament. She has paid whatever relevant duties there. She has come back with the 11th ornament. While coming back, now next comes is this ornament is not in annexure 1, not in annexure 2. What I have to do? There is some entry, one rule which talks about your jewelry. So wait and watch for that particular jewelry provision. I have explained this is a pistol kind of thing. Next question, Namrat is asking, so do we need to remember all this list? Unfortunately, when I during the break, this is what one point I was recollecting. You read so many things. You read accounting standards, you read Ind AS, you read income tax, you read law, you read costing, you read accounting, you read direct tax, you read indirect tax. Do we need to remember so many things like transfer pricing? So there are 8 models. Valuation, there are 12 rules. Section GST, there are 7 valuation rules. So how do I remember all these things? My answer for this particular thing, Namrata, just understand the provision. Since you brought this point, I'll explain in a little more. All students who are listening to me, no need to buy hat. No need to buy hat. If you can understand the concept, if you understand the purpose, why this was brought in, if you know the essence of that, examination point in time, maybe a day or 2 days well in advance, you need to make a list. These are the tables which we have not by-hearted. You just need to remember so that we need to examine. Reason, examination, they will test you probably by way of how to apply that particular provision. Like annexure 2. Washing machine having, like refrigerator having capacity more than 300 liters. Examination, they'll test you a question. Mr. X has imported a refrigerator having 150 liters capacity as a baggage. Examine the provisions for payment of customs duty. Assuming a particular rule excludes the items which are there in annexure 2. Now, Mr. X brought a refrigerator less than 300 liters. Now, here, what should strike to you is, sir, how do I read this more than 300 liters, less than 300 liters? Now, just understand this background. If this background is clear, if you make some running notes, reference to 300 liters, reference to 50 bullets, reference to 100 cigarettes, you just need to make a reference to those underlying aspects. What is not covered there, probably that would be tested in your examination. Now, next question, what Amrit is asking. Sir, if you read Annexure 1, so there is a reference to 50 cartridges. There is a reference to 100 cigarettes. There is a reference to 50 cigars. There is a reference to, say, 40 grams. Now, should you need to remember? Probably till the exam is clear, you need to remember. Once you qualify, you have a Bayer Act, you have these things for you to refer. Now, what is tested in examination may not be that 50, 100, etc. Less than 50, more than 50. Less than 300 liters, more than 300 liters. As a professional chartered accountant, are you in a position to interpret the law, interpret the notification? When you give a written opinion to your client, when you, as a business CEO, when you want to take a decision, are you applying your thought process to see whether to take a decision collectively for optimization of business? This is the intent of my curriculum, right? So examination point of view, students, as Namrata saying, remembering all these aspects from an average student point of view, not possible. Again, as an examination point of view, we will not test you to remember these aspects. We will test you application of these aspects. That's the only objective. Hope I have made your question clear, Namrata. No need to buy hat, ma. My humble suggestion, don't buy hat. Even if you buy hat, ratke, you'll do blunders in your exam. Rather, understand the essence of the provisions. Coming back. Mansa says, gold mentioned in both Annexure 1 and 2. Good reasoning. Intention of, like if you look at Annexure 1, if you look at Annexure 2, Mansa, probably household items, probably not defensive items, probably a lifestyle. cigarette, cigar, alcohol, firearm. It's a kind of lifestyle. There's a set of a class of people, human beings, who have a societal status. Along with that societal status, Annexure 1 may be relevant. There's another set of class of human beings, Annexure 2 is required. That's how the bifurcation is made, Mansa. Hope this is clear now. Then, Harshit says, so what is other than ornaments? Gold and silver other than ornaments. Now, gold and silver, Harshit, again, I'm bringing to the basic aspect of identification. I want to buy gold. I want to buy gold. If I ask this question to Harshit, what would you say? Sir, if you want to buy gold, I'll give you a like option 1, go and buy 24 carats gold. Option 2, go and buy 22 carats gold. Now, why 24 carats? Why 22 carats? Human perception. So my father-in-law, he has a belief that 24 carat gold is not a good luck. 22 carats gold, which has a copper mix, is a good luck. Perception. Again, someone asks you, Harshit, I want to buy gold. Harshit will say, do one thing. Don't buy raw gold. Raw gold may not yield you anything. Buy an ornament which is made of gold. This ornament made of gold gives you a luxury to present you well in a society. This ornament made of gold gives you a security to your family members if some unfortunate mishap happens. Now, look at the way I can have gold in a raw form. I can have gold in a ornament form. When I say ornament form, ring or chain. That's called other than gold, which is an ornament. Ornament, gold not in a pure form. Other than ornament, in a pure form or semi-pure form. Ornament is generally for wearing purpose. This is how we need to understand. Domestic refrigerator, both are same, brother. You're getting more technicality. Reading in between the lines is relevant interpretation point of view. Reading in between the lines so much is hazardous to health. So don't go in that depth, right? Now let's come back to rule number 3. Page number 5.50. General duty-free baggage allowance. General duty-free baggage allowance. The general, as the name goes, general, not specific, general, applicable for common public. Duty-free baggage allowance. Duty-free baggage allowance. Shortcut. For different class of passengers coming from different countries is given under. Different class of passengers coming from different country. When I say class of passenger, please remember what you call when you book a ticket, infant, other than infant, senior citizen, other than senior citizen. Class of passenger, infant, passenger, senior citizen. Now, common between infant and senior citizen. Common between infant, senior citizen. Very common thing, nappy pad. Over age, a baby doesn't have so much of knowledge to go to washroom. Similarly, as the age progresses, as the human gets on older, they cannot control few things. Nappy pad is something which is common for these two. Now, why I'm giving this example? Class of passengers. Look at the way the policy is formulated. I'm going so depth where you will understand the policy point of view, how this bifurcation is neatly taken care, looking at the various interests. Coming to this duty-free baggage allowance. They are coming from different countries. One is this classification. Second is country specific classification, which is given under rule number 3. Class of passengers. Indian resident or foreign residing Indian or tourist of Indian origin excluding infant. Let me see. I think somewhere definitions are there. Resident, foreigner, etc. Yeah. Uh, I'll explain the definitions and I'll come back to that now. Infant. Infant means a child not more than 2 years of age. Now, when I say infant, all the belongings pertain to infant baggage. Now, please remember, infant cannot afford to have what you call a ring or jewelry. Infant, baby feeding, baby dress, baby nappy pads, baby medicines, baby body lotion. Now, all items relating to infant, which is called a need baggage for infant. That's the reason they brought infant separately. Assuming for a moment, a lady is coming with an infant. Infant is put into this baby towing this one, what do you call it, cart. 10 kgs of gold is put beneath the infant. Now, the lady cannot say, no, that bar gold is not belonging to me. The bar gold is belonging to infant because no one can touch minor. No, it cannot be accepted. Baggage is the baggage. In relation to infant, all the needs of infant has to be identified separately. So for the purpose of customs law, less than 2 years, not more than 2 years is called as infant. Resident. Resident means a person holding a valid passport issued under the Passport Act 1967. This is as per Indian. This is as per India. Resident of an Indian origin who holds passport. Normally residing in India. Normally residing in India. So he is called as a resident. Tourist. Person not normally resident in India. Expat. Example, expat. Not expat, a person who comes on a purpose, who enters India for a stay not more than 6 months, not more than 6 months, in the course of any 12 months preceding for legitimate non-immigrant purpose. So person who comes to India goes back. It's called tourist. Personal effects means things required for satisfying daily necessity, but does not include jewelry. Important definition. Jewelry is not a necessity. Human clothing, chappal, your spectacles, your body-related glow items, medicines. Now, these are all personal effects. Jewelry is not a personal effect, so it cannot be called as a personal effects. Sorry, I just lost the screen. Yeah. So these are the items which are defined in your customs law as definitions relevant. Coming back, rule number 3. So baggage for Indian resident, baggage for Indian resident, class of passenger. First, they have identified who's a class of passenger. Could be an Indian resident, could be a foreigner residing in India, or tourist of Indian origin, excluding an infant. So any of these 3 people who are coming from origin country, which the passenger is coming from, any country other than Nepal, Bhutan, Myanmar, NBM. Any country other than NBM, other than Nepal, Bhutan, Myanmar. Articles allowed duty free of duty. Articles allowed free of duty. What are those allowed? Use personal effects and travel souvenir. Use personal effects, travel souvenir. What is a travel souvenir? The items which are purchased, which is meant for travel purpose. Like I visit to, say, Germany. In Germany, I went to a particular museum. In a particular museum, I need to know how to visit various places which I have to visit. This souvenir shows me the beauty, the importance of each and every place. When I come back, I bring back those souvenirs. So what they have said, all your personal effects, all travel souvenir, this is duty free. And in addition to this, what is there allowed? Articles up to a value of 50K. Articles up to a value of 50,000. Excluding articles mentioned in Annexure 1. Excluding articles mentioned in Annexure 1. Now, sir, you have read Annexure 1? All of you, just look at your Annexure 1. For a moment, Mr. X brings 10 cigarettes. Mr. X brings 10 cigarettes. Is that 10 cigarettes included in Annexure 1, excluded in Annexure 1? My question to you, when you read Annexure 1, please give me an answer. 10 cigarettes included in Annexure 1, excluded in Annexure 1. Read carefully and give your answer now. 10 cigarettes. Good. So it is not as per Annexure 1. My answer says excluding. Good, good. All of your answers are correct. It's excluded. So here, articles up to value of 50,000, excluding articles mentioned in Annexure 1. By virtue of 10 cigarettes, it becomes included in these articles. If carried on in person or in accompanied baggage of the passenger. So here, all those articles up to rupees 50,000, is considered as baggage. So what is the beauty of baggage? 35% ad valorem. So what happens? Assuming 40% is customs duty. On 35% of the value, I pay just 40%. Assuming if it is not baggage, I'll pay customs duty at a regular rate. So here intent of the law is whatever is covered in Annexure 1, I'm not calling as a baggage. So what if it is not baggage? Whatever is the regular value is there, I pay customs duty. So here I get 3 liters of alcohol. I get 3 liters of alcohol in my bag. Assuming I'm coming from Dubai, I land in Chhatrapati Shivaji International Terminus. There is a green channel, there is a non-green channel. I am carrying 3 liters of liquor. Now, when I carry 3 liters of liquor, I'll say to the customs officer, सर मेरे बैग में लिकर लेके आ रहा हूं, मैं चोरी थोड़ी कर रहा हूं. Then officer will say, ignorance of law cannot be pleaded. Because you are getting 3 liters of liquor, when you refer to the customs law under section 78, read with 79, read with annexure 1, up to 2 liters is permitted. Anything more than 2 liters, sorry, you cannot come. You have to pay customs duty and get those items. So yeah, this is how I classify baggage. I'll classify non-baggage. Non-baggage, regular duty. Baggage, I get up to a value of rupees 50,000. So up to 50,000, sorry, I need not pay customs duty. Articles up to value of 50,000 if carried on in person or in accompanied baggage. So up to 50K, I'll just erase. Let me clarify this. Up to 50,000. general duty-free allowance. So I am permitted to bring as baggage. More than 50,000. Baggage, then 35% at value. You have to pay customs duty. Hope this is clear, students. Rule 3 says that articles allowed free of duty up to value of 50,000. My used personal effects, travel souvenir, and articles having value up to 50,000 is permitted without payment of customs duty. This is my entry number 3. Let me see any dots before I travel further. Good. Now, Annexure 1 is not to be considered as baggage, ma'am. Anything other than Annexure 1, it will be forming part of my baggage. Now, in this general duty-free allowance, they say up to rupees 50,000, you are permitted. So what happens if it is more than 50,000? No exemption. Now, when I say no exemption, can I be covering that as a baggage? If I say it is covered as a baggage, then I will be paying 35% ad valorem. If it is not covered as baggage, the regular rate of duty is applicable. Just to sum up once again, point number 1. If it is a personal effect, no need to pay duty. If it is a travel souvenir, no need to pay duty. If it is any article other than Annexure 1, up to rupees 50,000, no need to pay duty. What happens if it is more than 50,000? Then I have to pay duty. Computation of duty, Namrata, wait and watch. I'll give more clarity in tomorrow's session. Let us go step by step. Going multiple things together, we tend to do many mistakes. Mansa, I read your messages, ma. Hard work is the only mantra. Hard work is the only mantra for anyone to succeed in our career. Right? So let's do our homework. Students, whoever is listening to me, please do your homework on a daily basis. There is no shortcut for success unless we put in our efforts. Like I understand your health circumstances, whatever be there, let that not become a hurdle in the path of your journey to become a chartered accountant. The career which is going to give a shape at this point in time is very, very important, is a milestone which is going to determine your future. That one paper, that one mark, that one attempt, everything gets mattered, especially in our professional examination. And take it from me, this course, along with any other value add course, now CA itself is very, very good enough for you to put in a good orbit. You want to do something beyond, then various other courses are. But do the homework on a daily basis, right? Coming back. Couple of questions from Harshit and Namrata. Namrata, first let us go whether to understand what is allowed as a duty-free allowance, what is not allowed as a duty-free allowance. Once we have a clarity, how we apply Annexure 1, how we fail to apply Annexure 1. Then, Harshit, coming to your question. What is a duty to be paid? What is a duty exempted? Again, tomorrow I'll give a better clarity. At this point in time, when I have more than 2 liters, it is fitting into Annexure 1. If it is less than 2 liters, it is out of Annexure 1. So if it is out of Annexure 1, then it comes to this computation of 50,000. Customs duty on 3 liters or excess 1 liter above 2 liters. Now, when I read this alcohol, I'll come back to this Annexure 1. Let me come to Annexure 1. Alcohol, liquor or wine, excess of 2 liters. This is Annexure 1. Alcoholic liquor, 1 liter. Alcoholic liquor, 1 liter. It is not covered in Annexure 1. Right? If it is excess of 2 liters, it is covered in Annexure 1. If it is less than 2 liters, then it is an article. It is an article value to be taken into consideration for 50,000. Excluding articles mentioned in Annex 1. So let's take the advantage of that article which can fit into the value of 50,000. If carried on in person or in accompanied baggage, right? They are considered exceeding 2 liters. If it is not exceeding, I'll call that as an article. I'll take into consideration for 50,000, right? So this is my explanation to all as of now in relation to your Annexure 1, Annexure 2, Annexure 3. Students, we are at 9 o'clock. Let us stop our discussion. Let us recap all this discussion and let us continue with this and refine one another small topic in our next session, right? So hope you enjoyed the discussion so far. Have given enough food for thought. Some confusion is always good. Having complete clarity, you will not do your homework. Some sort of confusion here and there, you'll go back, you'll read, you'll come with your fresh doubts, then we will discuss once again. So till then, good night, goodbye, see you all